over cycles has been investing in diverse markets. When our business was rough in the US in 2008 and 2009, it was terrific in China, it was terrific in Brazil. And I think that's been the same experience for most multinational companies, which is why I think you'll see globalization become a greater and greater force, even in a business like real estate that is locally focused. So again, I encourage conferences like this. I think it's terrific. The more we can learn how to have harmonious cooperation between our countries, the better off we're going to be. And as business leaders, I think we can blaze the path on that. So I look forward to seeing some of you in China. I have old friends here from Huabao and new friends from CIC and some of the rest of you that I've met. It's terrific. I look forward to seeing you in Beijing and Shanghai and other cities in China. Be happy to answer any questions that you have.
You did say that you expect the rent in the office space in New York continue to go up.
It's already gone up since the end of '09, which is where the statistics showed rents bottoming. It's already gone up 15%, and that's been with only 35,000 new jobs, which is a very modest number. So I would expect as job creation picks up more significantly, you'll see rents growing 30–40% over the next couple of years.
So what will happen to a city like New York? It's so fully developed, very mature. Where is the future?
Well, it's one of the tough questions that we face in New York is where is our new real estate inventory going to come from? Because especially in businesses like financial services, the need for new space that's equipped with modern technology is business critical. And if companies can't find it in New York, they're going to go to Shanghai, they're going to go to Hong Kong, they're going to go to Kuala Lumpur. They are not going to stay in New York if they can't find space that satisfies their needs.
Yeah, that's what I wanted you to say. The future is China.
Well, hopefully the future is both of us. I think the one key is if we could drive one message home, it's that the world is big enough for both the U.S. and China. We can both have a lot of success, and in fact, we'll have more success if we cooperate.
Thank you.
Rob, very interesting. From China's perspective, I know that the availability of financing for development project is a challenge now because the government trying to cut down availability of credit to the development projects. Do you see that as a challenge for the development projects in China? Because we see a lot of developers paying extremely high interest in order to get finance to get the project going.
Yeah, the cost of financing in China has increased. I mean, it's doubled effectively for conventional loans. If you need to go to trust companies, you're paying a very ugly multiple in terms of interest costs. I would argue it's been healthy for the market. It's cooled things off. It's taken some of I think the craziness out of the land auctions. And for us, it's led to much more interesting opportunities in terms of new investments. The best thing that the markets also had is the regulation on leverage. Unlike here, when the financing markets were really loose, where real estate developers were leveraging up 85–90%, in China, on an onshore basis, capped at 50%, even when the leverage was cheap, you still had to come up with a lot of equity. And that is what I think really saved things from a crash. I think the talk of a dramatic real estate bubble in China is off. I think that's really imposing a U.S. framework and experience on the China market where I think very different variables at stake.
Question. I was talking to a friend of mine who just bought an office building on Park Avenue.
Lucky him.
I think it's called Park Avenue Plaza.
Yes, on 53rd and Park.
Yeah, but she told me the cap rate, so the return to total capital was only like 3.5%. That sounds to be really low. Is that the market rate right now?
I don't know what the cap rate was for that deal, but over the first 6 months of 2011, cap rates compressed in New York very close to the level where they were in 2007. You've seen a lot of that froth fall off the last couple of months. because those deals were reliant on cheap financing and abundant financing. A lot of that has gone away. But yeah, cap rates in Manhattan roared back the last couple of years. That deal, I don't know whether it was a 3.5 cap, but the deal that was struck in 2009 for that building, you know what the cap rate was? 8%. 8%, and if you're right that it's compressed to 3.5, which is lower than I had heard, but probably not far off, that is dramatic. I'm not sure that there's ever been that much cap rate compression in 2 years in the years that these statistics have been kept.
I heard an interesting trend that hottest commercial building deals right now actually in Texas, like Dallas, like where the new companies and industries are going to build. So I'm just curious that for Chinese investors who have money right now want to invest in the U.S. real estate market, do you want them to come to New York, come, bargain, hold, and wait and see, or just go to Texas, just get right on the train?
The point I made earlier about land scarcity and how it applies to cities like New York or San Francisco does not apply in Texas. In Texas, there is a lot of land and there are very few zoning restrictions. So the problem in Houston and Dallas, when you have a strong real estate market, you have a dozen developers coming out of the ground with new buildings. That will likely be less the case in this cycle because there's not a lot of financing available, but I would still be nervous that a recovery in Houston and Dallas is capped, unlike in New York, because at some point there will be a lot of new construction, as there's always been in Texas.
Just last question. How do you find the Chinese developer? Do you go solo or do you work with them?
Our business model, and this is the same in China, India, Brazil, Europe, and obviously here in the States, is to create our own operating platform everywhere we invest. So we have at Tishman Speyer 120 people or so on the ground in China. And we oversee our projects in the same way in Shanghai or Chengdu that we do in Los Angeles or Chicago or New York. We've had a very positive experience with financial partners in China. So we are partnered with a state-owned enterprise as an example in our project in Shanghai. That's been terrific. I would say the other experience we've had in China that's been notable is a great experience with government officials. We've found that government officials there are really incented to foster economic development. And so as real estate developers, our interests and their interests are pretty well aligned. Just been a big help. Thanks very much.
Thank you.